On your screen here today is RIVN, and the stock had a very big move today, being up nearly 9% at one point, and you can see the stock has faded off. Now, we believe that today's move was heavily driven by options volume, and we're going to show you some evidence for that. First, we're going to flip over to our Hero chart. Now, what Hero is showing you in orange is the deltas or the hedging pressure driven by just call trading, and in blue is the deltas or options pressure just from puts. And as you can see, the put volume today, the put deltas are all pretty quiet, but there is a big surge higher throughout the day, a persistent push, so to speak, in this orange line up. Now, what that is telling us is that traders were buying calls throughout the day, and then right around noon, that flow shuts off. And when I say it shuts off, you can tell so because this line just moves sideways all of a sudden. So you see a very persistent move higher in this orange line, and then all of a sudden the options flow seems to just shut off and actually turn a bit negative, and the stock fades. So what we get is in this early day, right, we see that there is this pressure. And so what I want to show is the actual stock volume driven by this move. Now, it looks to me pretty clear, right, that you see a big options call trade here and a spike in the stock's price, and that call flow shuts off and the stock reverts. And then again, you get this really interesting move. Let's focus on this one. Around 10:40, you see this call volume really pick up, right? And there's just this extra big convex move in the stock where it moves up several percent, right, in the matter of a few minutes. Now, if you look at this interesting tool called Market Replay, this is something from the NASDAQ. What you can see here is all the stock prints so far today. And what you notice at the same time that the stock volume surges, that's this window right here, that is this spike in call volume. So we can go to Market Replay and we can zoom in here, and you can see very clearly somebody has to come in and they have to start lifting the offer. And we believe that is really what pushes this stock higher. And it seems very highly correlated to this call volume. Now, if we look under the hood just a little bit, this is actually the individual options prints that are taking place. We filtered out just for the September because we flagged this as significant volume. And what you can see is there's a very persistent September 16th, 35 call buyer. And you can see that this is a person that is electronically sweeping throughout the day. In this column here, we have the delta notionals, but what we can see is here, there's somebody electronically trading, right, throughout this whole period. And then the lots actually get a little bit larger. And it's around the time that these lots get larger that we see, again, this big surge in call volume. Again, once this call flow shuts off, the stock just loses its momentum and drifts back down. Now, the other piece of evidence here to note is the surge in skew as shown on your screen here. And you could tell on this bottom chart with Thinkorswim that it is the near-term expiration. So the teal color here is the September 9th expiration. The purple dots here are September 16th expiration. And then in the heat of battle today, this call skew is up around 150. It obviously has since faded. And so we could tell that the fact that implied vol was blowing out like that was growing so much, that there was a lot of call demand because that is one of the key drivers of call implied volatility. You could potentially have a situation where the stock is up quite a bit, but implied vol isn't moving a whole lot. We believe that would be because call inventory for market makers is not really building. Now, we believe that these setups are one of the places that provides the most edge when you're looking at your hero system. Once this call volume shuts off, and it's clear that it shuts off, we think that trying to take advantage of not only the decline in stock, but also the decline in implied volatility sets up a lot of interesting trades, particularly call and put flies, where you're going to try to monetize not only the fact that the stock is going to come down, but you get that crush in implied volatility as well. So we hope this video was helpful. If you have any questions, please reach out to us on Twitter at SpotGamma or send us a note at info@spotgamma.com. If you're interested in trying out these tools, all you have to do is go to spotgamma.com, hit subscribe now, and you can get a free trial of Hero.